Good morning, Steve Free in Chicago with the morning grain comments. Overnight, you're seeing a very risk-off and lower trade, especially in the energies, soybeans, corn, the metals, and most soft commodities. Initially, the crude oil was trending lower because of concern about demand and inflation. Sometimes high prices cure high prices. And we started seeing the potential drop in energy demand. But overnight, the China equity markets are sharply lower, and they continue to lock down major cities because of an increase in COVID cases. They have a zero tolerance there. A few cases locks the entire city down. And so there's concern about their commodity imports, especially on the energy side. We also, tomorrow, will be seeing the possibility of a $180 billion Russian bond default, which could also rattle equity markets. As far as grains are concerned, U.S. corn, soybean, and wheat export shipments to date continue to be behind the pace to meet USDA's numbers and last year. We still feel that lack of exports of wheat and corn out of the Black Sea will help increase U.S. corn exports. Down in South America, weather is dry across most of South America except central Brazil, which is helping their second corn crop. But here again, the Brazil corn and bean production is going to be down, and they could not have beans for exports after September, which means an increase in potential U.S. corn and soybean export demand and lower carryout here. We also saw in Argentina, they banned soybean meal and soybean oil export licenses. This is a prelude to export taxes that could include wheat. So bottom line is that the government gets more money from exports and the farmers get less. In Ukraine, there's talk about Ukraine corn plantings down as much as 40%. Other people, though, are concerned that the Ukraine farmer just might not plant corn. 80% of the crop he plants goes to export, and there is a ban on corn exports currently. And so they have about, somewhere around 20 million tons of stocks that could be there for their domestic use. And then down in South America, Argentina's got 14 million tons of wheat bought versus that much exports would probably soften the blow on their wheat exports because of an export tax. Here in the United States, U.S. Southern Plains is dry, Delta and Southeast is wet. Crop ratings for wheat went down in Kansas, Texas, and Colorado, up in Oklahoma. Still think that corn and bean markets are undervalued, and the wheat rally should continue, especially if in mid-April U.S. Southern Plains develop a dry weather pattern. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.